Well, ladies and gentlemen, just like that, the stock market is back in the red, and we got to break it down in this video. We have to break down some charts, my thoughts on the markets in general, and of course, earnings, stocks I'm looking at. And before we even do that, make sure to get your 5 free stocks from Moomoo, link down below. Deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. And on top of that, you also get a free share of NEO, 1 free share guaranteed. So again, use that link, deposit $100 and get your free money. And with that being said, let's get right into the video. So it's about 4:20 here on the East Coast. Shout out to Elon Musk, right? You guys remember that. We're not going to talk about that in this video, but markets today did not do so well. Again, we had a red day. Dow went down 0.3%. We had the S&P down 0.4%, Russell down 0.2%, NASDAQ down 1.1%. We had the VIX down 7%, which we will talk about here in a second. And gold and silver, both of those did well. Gold up 0.6%, silver up 1.6%. And what you guys can see here on the 5-day, 5-minute, and this kind of, probably goes hand in hand with why the VIX was down, we can see SPY had a pretty big intraday rally. In fact, we took out the intraday highs on this rally in the latter half of the day. Take a look here, guys. We opened up on, let me pull up this intraday chart. We opened up this morning. We ran up to about 425. We saw a sell-off after that. We got a flush, whatever you want to call it. And then we ran all the way up to 425 again. In fact, we got up above 426 right before the markets closed, hence why, again, we broke out of the intraday high, which was right around 425.28. But overall, in the grand scheme of things, look at the 20-day chart, and the same goes for Triple Q. SPY still under the downtrend. It's still in a downtrend. It's under the 180 SMA, and Triple Q is as well. So we did see a nice push in the latter half of the day, but ultimately the VIX, yes, it went down on that latter half of the day push, but ultimately we're still in a downtrend, and it doesn't look like it's changing. Pretty much what I've been saying here for the past couple of days, and until the trend breaks, I'm not going to be convinced that we are reversing. So what do you think? Let me know in the comments down below. And again, we had a pretty interesting day in terms of everything. We had gold and silver up, silver back over 26 an ounce, gold back over 2,000 an ounce. Let's see what crude oil did. Crude oil is hovering right around 105. We're actually seeing this head and shoulders play out, which I did call out this morning. If you guys caught that, I don't know if you did. You guys in my Patreon probably saw that in the morning video, and I think I mentioned it in the second video. But overall, head and shoulders playing out on CL here. This has to break back over 115 for us to make a move back towards that 130 a barrel high that we just hit a couple of days ago. I mean, it was just 4 days ago, guys. Talk about volatility. So watch out for that on CL. Let's take a look at the gold chart very quickly before we talk about some earnings. I'm actually seeing a bit of a head and shoulder action on gold as well. Look at that, guys. We have the left shoulder right here, the head right here. Let me draw that out. And then we got the right shoulder right there. Look at that. So neckline on gold right here is right around, let's see, 2015 an ounce, and we're right around 2000 an ounce right now. So for this to break out, market, guys, 2015 needs to break. So I'm going to put a single alert there right now. Mark is at or above 2015. There we go. And again, if we break that, this will probably run up and test the highs from a couple of days ago, 2060, 2070. That's what I think could end up happening here. So what do you think, guys? Drop me a comment down below. Smash that like button and make sure to subscribe. It really helps me out in the YouTube algorithm, and I do appreciate all you guys. As always, you guys are awesome. So let's break down some earnings here, some stocks I'm looking at. Number one is Oracle. They closed at $76 a share. They went up 0.7% on the day. And here after market hours, It is not looking pretty, guys. They are down about 5.5%. So let me pop up this live news tab and see what they did. It looks like they missed EPS $1.13 versus $1.18 EPS. Sales came in at 10.51 versus 10.51 billion, so pretty much in line with the estimate. So what are we seeing here? Lower Q3 profit, which we just covered, falling operating margins, which is not good, and free cash flow. Oh, that's not good at all. And I'm not seeing anything on guidance. It's probably too early, quite frankly. I mean, we might get something in the earnings call in the next half hour to an hour, and obviously we won't be able to cover that in this video. But overall, yeah, I mean, this looks like it wants to go down and test the lows, maybe even take the lows out from the end of February around 69, 70 bucks. And if we don't get guidance, or actually if we do get guidance in that earnings call and the guidance is not pretty, this will probably fall right under 70 and it would be a falling knife. So be careful with Oracle. That's what's going on, though, with their earnings. They're not looking too good. Shrinking operating margin, shrinking free cash flow, not the best. Let's see Ulta. This might be up. Yeah, there you go, guys. It's up. I had a feeling Ulta would do well, and we didn't even see the earnings yet, mind you. So Ulta went up 1.6% on the day. Now after hours, it is up another $6 a share, or around, let's see, percentage-wise, what is that? About 2.5%. So let me pull up the live news tab, and that's actually after they fell down to 355. So Ulta initially tanked about 25 bucks. Then it rebounded. It ran up to 389. Now it's at trying to find an equal. What am I trying to say here? It's trying to find some solid ground at about 380, 385. So they did EPS of $5.41 versus $4.57. Holy crap, guys. They crushed that EPS estimate. Sales came in at 2.73 versus 2.69 billion. So nice double beat. They see full year 22 EPS of 18.20 to 18.70 versus 17.18 estimated. So nice full year EPS guidance, and sales guidance looks great. 9.05 billion to about 9.15 versus the 8.59 billion estimate. So that's very good. I mean, what else could you ask for? Double beat. Sales guidance is great for the year. EPS guidance is great. And let's see here. Anything else? Oh, they're doing a $2 billion share repurchase program or authorization, or the board just approved it, actually, which is great. So you guys know what that means, right? When they buy back shares, less shares are out on the market. It makes your shares, if you own the stock, more valuable. So that's great. You always want to see companies buying back their own stock, especially if you are a shareholder of that company, which I am not a shareholder of Ulta, but if you are, kudos to you. That's fantastic. And what we're noticing here is my alert is at 390, and we're right at 390 right now. So I have a feeling this does break 390, goes back into the 400s over the next couple of days. Don't quote me on that. I could be wrong. I've been wrong in the past. Nobody knows what's going to happen. But after that report, and given the momentum we're seeing right now after hours, it's looking pretty good, guys. It's breaking out. It's looking pretty good. So let's go to Docusign, which I haven't seen these earnings, and I'm going to be a bit hesitant. I'm closing my eyes, guys. I don't know if I want to see this. Oh, let me pull it up. There it is, guys. What did I say? Did I not mention this in another video? These speculative stocks that have gone down 80%, you might be like, stocks that have gone down 70, 80%, they can't possibly go lower, right? Well, they can go lower. I mentioned that. If a stock's gone down 80%, it could go down another 20%, 10%. And look at this. Docusign went down 4.5% today at close, and here after hours, they are down from 93 bucks, which is where it closed at. Now it's down at $81. The stock's down another 13% after hours, and including the intraday 4% loss, this is down almost 20% just today in general. So this is what I'm talking about. Just because a stock goes down 60% and you're like, there's no way it can go lower, it can always go lower. Nobody knows when the bottom is. And especially with a company like Docusign, which, if you guys didn't know, I mean, you clearly know at this point, you should know, this did very well over the pandemic. Now we're moving post-pandemic. and they're not, I mean, they're not as in demand, I guess. These businesses, Zoom, there's a lot of them. We're not going to go into them, but you know what I mean, right? So let's see what they did. Obviously, their numbers were probably not good. We got some weak guidance. Yeah, there it is, guys, weak guidance. So they did 48 cents versus 47 cents estimated EPS, so that beat, and believe it or not, it looks like they double beat for Q4. 580.8 million versus 561.47 million sales, so they had a nice double beat, but they see Q1 sales under the estimate and full year 23 sales under the estimate as well. So that is not good. That means there's more weakness moving forward. It's going to continue to weaken, and yes, maybe they're still growing, but not nearly as fast as people thought, and that's why the stock, or as people thought it would continue to grow, and that's why the stock's being repriced, right? That's just the stock market for you in a nutshell. Stocks get repriced when expectations aren't as great as, people thought. So that's Docusign. Let's go over to Blink, BLNK. I think they finally reported today, about dang time. I mean, I think I covered this stock a couple of times. They were supposed to report last week, maybe earlier in the week before, and finally, here they are. They reported earnings. So let me get some coffee, guys, before this one. Hold up. Looks like they missed EPS, negative 45 cents versus negative 39 cents estimated. They had adjusted EBITDA loss of $9 million versus $4.7 million last year. So their losses are widening like crazy. And they had sales, which actually did pretty well, $7.95 million versus $5.43 million. So nice beat in sales, but again, losses are widening. They missed EPS, which is not the best sign. But again, given this is a growth company, they're investing heavily in their business, it makes sense they're losing a lot of money. I got to look deeper into the financials to see exactly what they're burning money on, but my guess is they're obviously trying to grow the business, and that takes investments in different areas, right? So at this point, it's down 1%. Well, it went down 1% on the day, and after market hours, it is down about, actually, that is not good. It's probably down about 7%, 5%, 5-6% down after hours. So I have my alert set. I don't know if you guys noticed it. It's right around 25.50. If you guys take a look here, that's been resistance, 25.26 roughly since the beginning of February, so for about a month. So if we take that point out and we actually see an ascending triangle forming, if that breaks, there could be a nice push towards $30. And we'll see if that happens. Time will tell, right? We all know that. Time will tell. We also had Rivian today, and let's see what they did. Maybe they pushed their earnings back. I don't know. They went down 6% on the day. Now they're down another $1.40 after market hours. So they did negative 243 EPS versus negative 197. So bigger loss than expected. Sales came in at $54 million versus $60 million. So they missed sales by a good chunk there, and they missed EPS, and they see about full year 22 vehicles produced of around 25,000, EBITDA loss of almost $5 billion, guys. Holy crap. CapEx of $2.6 billion. So this money, or rather this company is losing money hand over fist. And I made a video about this, and I think a lot of YouTubers did, and I'm not saying, oh, we're all geniuses. It doesn't take a genius to be able to see this, but I made a YouTube video months ago. The stock was a lot higher, and I was saying, this is a bubble. Be careful. Don't fall for the hype. And it's down massively. I might have to go check that video and see what price it was when I made it, but I'm telling you, it's got to be down 40%. 40%. Geez, guys, voice crack, man. This sucks. Hold up. 40%. Who knows? But yeah, that's Rivian. Downtrend is full. It's in full effect. JD.com is another one that got completely destroyed today, down 15.8% today alone, and it's down 45% from that recent high in November, and this is finally catching up to Alibaba. If you guys have been watching these Chinese stocks, Alibaba has been hit the most, or at least out of the ones I track. This one's down about, it's 50-60% at this point, probably even more. And JD was holding up. It was holding up. It was above $60. It was only down about 30%, still down a lot, but it was only down 30%. And now the bottom has dropped out. I mean, after their earnings report, we broke under $60. We dropped a whole $10 today, intraday. I mean, again, it was down 17% at one point. So these numbers were not that great. I looked at them this morning. They're making a lot of money on top line. I think they grew 23% year over year. But the EPS numbers, and just in general, what's going on with these Chinese companies. A lot of fear around them. People are probably just panic selling left and right after little misses in earnings or little guidance issues or whatever. So that's what's going on. JD, again, just be careful with these. They're a bit risky. AG is another one. This is First Majestic. We've talked about this a lot on the channel, and we've just been watching it. It broke out today, up 7%. And did I not say we were going to go to 1375? We did that a couple days ago. And I told you on the pullback, watch for a bounce back at 1230. We did that. And now we filled the entire gap back up to 1375. And now's the real test. If we break clearly above, I'd say 14 a share, AG is going to start pushing 16, and that could happen easily over the next couple. I'm not going to say next couple of days, even though it could, but I don't want to just say, oh, this is going to happen for sure. But over the next couple of weeks, months, absolutely, I could see it happening, no doubt. So they did 2 cents in EPS, which is down from 11 cents last year, year over year. So their EPS is down quite a bit, but their sales are up a lot. $204.9 million in sales versus $117 million last year. So they almost, I don't want to say almost doubled up, but they increased sales by about 80%. 70-80%, which is incredible. So I'm liking it. I'm going to put my alert at, what is it here, 14. Let's do that together, $14, and we'll watch it moving forward, guys. And that's pretty much it. I hope you all enjoyed this video. If you did, hit the like button, subscribe, drop me a comment, and join my Patreon if you want all my buy, sells, call outs, morning update videos, more access to me throughout the day, plus more. Use that link down below or go to StasserFest.com/Patreon to join, and make sure to get your free money for a moo. Use my link, deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. And on top of those 5 stocks, you get 1 free share of NEO guaranteed, which in and of itself is $20. A share of NEO right now is $20. So use that link. I'll catch you guys in the next video. Thanks for watching. Peace out.